All right, it looks like we've gotten everyone in the room. Welcome, everyone. Thank you for your patience. We had a little bit of technical difficulty this morning because of the storm, so I'm glad you could all make it. It's great to see you all here today. This webinar is being brought to you by MCSC Women's Business Center. We're a nonprofit business center serving entrepreneurs in SLO, Kern, and Monterey counties. Let's see if I can get my technology to work here. There we go. We offer small business, no cost, one-on-one business consulting with professionals in finance, marketing, social, marketing, e-commerce, management, you name it, we can help you with that. Our contact information is on the screen and it will be in the chat box later as well. I would like to thank Denise Ravel for presenting today. Denise has a BS in Business Administration with an emphasis in finance. Her experience includes almost 2 decades as an IRS auditor and a Colorado CPA with additional experience as a tax preparer. Since moving to California, she's earned her registration as a California tax preparer and QuickBooks expert and online pro advisor. She offers the perfect combination of professional experience and small business understanding to be a real asset to entrepreneurs and small businesses looking for a better understanding of their financial picture. Denise recently completed our entrepreneurial training class, which we'll talk about at the end, and launched her private practice here in California as a tax preparer. Not only is she a consultant for us, but she's also an entrepreneur like most of you, and we are thrilled that she's here. So just a reminder, please mute your phone and limit your distractions. We'll be taking questions in the chat box throughout. I will be watching the chat box. So if you think of a question, just put it in there and then we'll stop here and there to discuss your questions. This webinar is being recorded and we will send you the link once it's processed. All right, well, thank you all for coming. And now I hand you over to Denise. Denise, go ahead.
Hello, everybody. I am so happy to finally meet you all. And was a little concerned that we wouldn't be able to broadcast, but it looked like we worked everything out. So that's good. Welcome to Simple Bookkeeping for Your Business. And as some of you know, well, Barb already introduced me, that's great. I'm here today to give you a brief overview of setting up your business, taxes you might need to pay, and some bookkeeping and bookkeeping tasks to keep you organized. Really, I'm trying to teach you about accounting. Not that you need to know it that much, but if you use accounting software, you should know it. So and actually on February 9th, I will be taking you into 2 different types of QuickBooks so you can see how to do transactions. But I'm going to try to keep it really simple for you because I don't know how many of you have any accounting experience or tax software experience. So this is pretty elementary. For any of you that want detailed guidance, I will give my contact information at the end of the class so you can schedule a free one-on-one consultation with me through MCSC. Well, for most businesses in California, you're required to get a license or permit. If you're a retail seller, you don't need a business license. But anyway, if you want to know what you need for your type of business, just go to www.calgold.ca.gov and then you enter your city or county and your type of business, and it will give you a laundry list of what all licenses and permits you may need. But then you probably want to talk with sometimes if you're in city limits, you would need to get a business license from the city. But if you're in unincorporated San Luis Obispo County, then you would need to get your business license from San Luis Obispo County. Next, sales and use tax, and hopefully no one will be coming after you. Just kidding, I love this picture. Yeah, because you'll be dealing with state and federal taxing authorities. So if you're a retailer, you need to register with the California Department of Tax and Fee Administration and pay the state sales tax, which applies to retail sales of goods, but not services. And that department assigns a filing frequency based on your volume. It could be anywhere from monthly if you have a high volume or annually if you have a low volume. The use tax applies to the storage use or other consumption of goods in California that you buy online or through the mail, and the retailer does not withhold and pay over the state sales tax. The sales and use tax consists of three parts: state tax, local tax, and perhaps district tax that might be in effect. Now, an important thing to do, which, you know, a lot of people don't do, and it's unfortunate, but you need to make federal and state estimated tax payments for the current year if both of the following apply. You expect to owe $1,000 Fed or $500 state in tax for the current year, and you expect your withholding and refundable credits to be less than the smaller of 90% of the tax to be shown on your current year's return, or 100% of the tax shown on last year's return. So it's important to set a system in place to set this money aside so you have it available when you need to pay the taxes. For income taxes, you need to set aside a portion of your net profit, for example, 25%. You can put it in a separate bank account, or you can keep track of it through your accounting software if you have it. If you're a retailer, of course, you collect sales tax, and you need to set that aside too. We'll go into that transaction later. If you're using a business accounting tax software, federal tax would not be a deduction, of course. So you'd have to debit, own or draw, and credit federal income tax payable and state income tax payable to set that aside on your accounting software. Business, why do I need to keep books? Wow, I'll tell you. A variety of reasons. You need to keep tabs on your assets, liabilities, inventory, and other records, because it can help you secure your investors, protect your assets. Because if you have employees, you know, they could unfortunately take some of your cash or take some of your inventory or some of your, you know, a stapler or whatever. And if you want to grow your business and take it to the next level, you want those financial statements and accurate, complete records, because that's what banks and investors are looking for. So your primary duties will be your accounting, the financial reports, and preparing and filing tax returns. There are a few accounting basics. Just decide on a bookkeeping method, set up your business accounts, record every financial transaction, balance the books, prepare financial reports, stick to a schedule, although that's kind of hard to do. Store records securely. I always, you know, I have a low volume because I'm retired and I do this part-time. but I just put everything in an envelope or a box or something and store it and get guidance along the way. There are so many YouTube videos out there. Uh, QuickBooks alone probably has like 62 of their own. And, you know, if you use QuickBooks, they have a help search area. So, and they have people that you can contact and ask questions. So you can get a lot of guidance on the way. What documents are considered my books? One
Denise,
thing that,
can I just
yeah.
ask, what is high volume versus low volume? You've mentioned that a couple times and somebody wants to know what that means.
Oh, well, say if your sales are $200,000 a year, or if your sales are $10,000 a year. High volume is 200,000, low volume is 10,000. That's what I mean.
Thank you.
You're welcome, Barb. Can you hear me okay now?
Yep, sounds great. If there's anybody who cannot hear her, please let me know in the chat box.
All right, so thank you, Barbara. When I was an auditor, yeah, we send out a list and we want to see the items that are on this page. You know, if you just are using spreadsheets of income and expenses, that's fine. I've seen that. We just want to see something that ties to the return that you filed, you know, then that will make your audit a lot shorter. Okay, or if you have accounting software, you could give us a general detailed ledger, or some, you know, if you have a complicated business, they have a general ledger and subsidiary ledgers. I'm not we anymore. I'm a retired IRS agent. So, but anyway, they want to see invoices or point of sale records, bank statements for your business, receipts, checks, and bank or credit card statements for expenses. You have to be able to substantiate your expenses. And then a depreciation schedule is, you know, a list of all your equipment, and I'll go into that later. If you have a profit and loss, that would be great. If you have a balance sheet, that would be great. Okay, so some bookkeeping tasks now are, of course, if you have a store, you're going to check your cash register, see how much cash you have in there. Weekly accounting tasks, and these are just recommendations, you know, do what you can. Record your transactions. You just want to do it when it's fresh in your mind so you don't forget and have to do a lot of searching to find out what that is. Okay, document and file receipts. You've got to keep your receipts and your bank statements and your check register. I would recommend deposit slips too, because sometimes, seriously, if you get audited, they will do a bank deposit analysis of all your bank accounts, personal and business, and any large deposit that you can't explain, they'll just assess you unreported income for that. So it's good to keep, you know, those deposit slips so you know what that was. And if you got loan proceeds, keep your loan documentation. If you got a gift from your mother, whatever, you know, keep that. But review unpaid bills from vendors. Pay vendors and sign checks. I don't know about you guys, but I pay for everything online practically, or with cash. It comes out of my business checking account. I use my debit card, so I don't really have a lot of unpaid bills. And if you are going to invoice your customers, definitely you want to collect that money. So prepare and send your invoice. Review projected cash flow. I do. I just, you know, but mine's very simple. I just look in there, see how much money I have. And if I want to buy something, I think, uh-oh, I don't have enough money in there, so I put some of my own money in. Okay, monthly accounting tasks. This is very important. If you have accounting software, it's so easy to reconcile your bank account. You just take your statement for that month and you just basically put in your ending balance and then all your transactions for that month. But of course, you have to be up to date with your accounting first and have all your transactions coded. Then you just put in the ending balance on your bank statement and wow, you know, it can be done in a snap. It's so easy. Okay, you want to review your past due receivables just because you want to collect money people owe you. Analyze inventory status. Yeah, are you running low on something, or you know, something really popular or something not very popular and not moving at all? Don't want to order any more of that, possibly. If you have employees, yeah, process or review payroll and approve tax payments. Review your actual profit and loss versus budget and prior period. If you take that class, that 10-week class, explore, launch, and whatever, boy, you will learn about financial forecasting in there. And so these will really make sense then. Review month-end balance sheet versus prior period. Here's your quarterly accounting tasks. Again, you're looking at that P&L estimate. If you have employees, yeah, you might have to file quarterly payroll reports and pay in that tax. You might have to review your sales tax and make quarterly payments on that. And you definitely, for the IRS and the state government, you need to make your estimated tax payments quarterly. If that's too hard for you, you could even do it monthly if you wanted. Okay, and then annual business accounting tax. Check your past due receivables. Do you think you're gonna be able to collect? If not, just write off that loss. If you're using the accrual method, you can write off bad debts. If you're using the cash method, then you know you don't have to report it because you didn't receive the money. Okay, review your inventory. Are you going to write off obsolete inventory that didn't sell? Now's the time to do it. You get a deduction on your tax return. And then, of course, if you have employees, you'd fill out W-2. And if you hired contract employees, then you issue a 1099 miscellaneous, but actually now it's a 1099 NEC for non-employee compensation. So, does anybody have any questions about any of that, Barb?
I'm going to answer them as we go, so I think we're good. Go ahead.
Okay. All right, well, what type of bookkeeping is best for my form of business? Well, this class actually is geared towards a sole proprietor, which would report their income and expenses on a Schedule C that's attached to their 1040. That's what I report mine on. I mean, I had a S corporation in Colorado, but here in California, you have to pay an $800 franchise tax, whether you have any income or not, whether you have a loss. And I did not want to pay that. So I dissolved my S corporation, and now I'm operating as a sole proprietor. But anyway, you get the business use of home deduction if you work out of your home and you have an exclusive place of business. If your home is your only place of business, you can deduct business miles from your home to go purchase supplies, to meet with clients, etc. But you need to keep a log of your total miles traveled for the year and your business miles. And the QuickBooks subscriptions come with a mobile app for you to use to track your mileage. You get the qualified business income deduction, as do entities. You can deduct 100% of the health insurance premiums you pay for yourself and your family, but it's on the front of the 1040, not on Schedule C. So is the qualified business income deduction. That's on the 1040, but the business use of home deduction is on the Schedule C. As a sole proprietor, you pay SE tax and you get a deduction for 1/2 SE tax, but again, that is on the 1040. So here is the page 2 of the sole proprietor Schedule C, and that's where you record numbers, amounts for your inventory. There are 3 ways to keep books. You can use a spreadsheet, as I said. Excel, I would recommend. You can use desktop accounting software, for example, QuickBooks Desktop. You buy it and then it lasts for 3 years, and then you need to buy it again. But during that 3 years, you get all the support and everything they offer. Or you can get cloud-based accounting software. For example, QuickBooks Online, which I'm a pro advisor for the QuickBooks Online. Xero or Wave, which is free, cloud-based accounting software. So if anybody is really feels adventurous, wants to save some money, try Wave. I used it for my S corporation, and I thought it worked fine. It's not as detailed or as good as QuickBooks, but hey, it's free, and it does everything I need it. Okay, so single entry bookkeeping it's just a spreadsheet. This is an Excel spreadsheet that I set up, and you just have columns for your income, of course, and then just put other columns for the expenses that you're going to use. And I just take them right off the Schedule C, because some people like to file their own return on TaxWise or something, the IRS website. If you have it organized like the Schedule C, it'll be a snap at the end of the year. And then just put your amounts in every month, every week, every month, whatever you want, and then total them up at the end of the year, and you are ready to go. But if you have inventory or, you're collecting sales tax, then you need to keep that on a separate spreadsheet. Well, do you want to get your books done quickly? Do you want to make it easy to prepare your taxes? If you do, I would highly recommend some type of accounting software. QuickBooks is used by 80% of businesses and comes with a variety of features and price points. One thing I have learned that really QuickBooks Simple Start only costs $25 a month. That's the cheapest, except for QuickBooks Self-Employed is $15 a month. But that is single entry accounting in QuickBooks Self-Employed. So you do not get a balance sheet out of that, but it will generate a report that matches line for line on Schedule C. That's QuickBooks Self-Employed. And Simple Start, that is a major one. I don't know if you can handle employees on that, but you could make adjusting entries at the end of every month for inventory and cost of goods sold. So really, that would be a good one to use. But anyway, as I said, QuickBooks has lots of help features and Bank Connect features, which are unbelievably fast. Wave has that too. So, it's fantastic. It's like, double entry accounting, which we're going to get into, is what you get when you have accounting software, QuickBooks and Wave. And actually, if you have that bank download side of it, That's one side of your entry. So you need to just figure out what account to put that expense in, or that income, or whatever. That's all you need to do on this accounting software with the download feature. Okay, so now we're going to go into double entry. There are two methods of accounting and lots of in between. Well, not lots, but you could have a hybrid method. Anyway, cash accounting recognizes revenue and expenses at the time cash is paid, received, or paid out. Accrual recognizes income at the time revenue is earned and records expenses when liabilities are incurred, regardless of when cash is received or paid. Now, for instance, if I had to make insurance premium payment, a lump sum. For cash accounting, I just get to deduct it the year I make it. In accrual accounting, I would have to call that insurance premium a prepaid expense and then write off 1/12 every month with an adjusting entry. They call it recognize it every month. But it's going to end up the same way because I paid it in January. So by December, I will have used 12/12s. But anyway, accrual is if you want to track receivables. If you issue an invoice and you are waiting to be paid, that is an account receivable. If you receive bills and you need to enter bill into your accounting software and then pay it later, that is an account payable. And if you are collecting sales tax, that is an account payable. So you have to use accrual basically. But you could use, cash for some things and accrual for other things. Okay, so this is just a concept to be used in accounting, just to teach you about accounting. This is what, if any of you people took accounting in high school, this is what you would have learned. I did take bookkeeping, but I'll tell you what, I think I cheated. I paid somebody to do my homework or something, so I never really learned this. But anyway, debits and credits are bookkeeping entries that balance each other out. A debit is always positioned on the left side of the entry. The debit increases asset or expense account. And if you can just remember that much, that's fine. And then just remember, the opposite for the other side or whatever you can remember. You just have to commit these things to memory or write them down on a piece of paper every time you go to do your accounting or whatever. Just, this is only for accounting. A credit is always positioned on the right side of an entry. It increases liability, revenue, or equity accounts, and decreases asset or expense accounts. Now, this is a little transaction entry spreadsheet that I sent to Barb that she'll send out to you, and you can use it. This is just to help you understand debits and credits, and if the shaded areas on there mean no entry goes in there. So if you look at the top, those are assets, by the way. With white areas underneath the debit asset column, that's where you can enter numbers. So that is where assets go on the debit side. Okay, accounts payable, you can only enter numbers on the right-hand side under credits, liabilities. And then for owner investment, you can only enter numbers on the right-hand side. sale, and so on and so forth. And now I filled in a couple so you can see this. This is a strange thing. If both sides of the transaction are on one side of that thick vertical center line, then you have to use pluses and minuses. If they're on opposite sides of that black vertical line, you can enter just the number. You don't need to use pluses and minuses. For instance, here, you made a sale. So you'll see under sales on the bottom half, on the right-hand side is $100. Well, those entries are on opposite sides of that vertical line. So bank $100, it was a cash sale. So $100 went into your bank account, which is a debit, and $100 went into your sales account, which is a credit. That's how you increase sales. Okay, and next, all right, now see both of these entries are on the same side of that vertical line, and you paid an expense. So, of course, hopefully you're running all these transactions through your bank account. Then, of course, your bank account balance is going to go down, and your insurance expense down below is going to go up because debits increase expenses. But you can play around with it in your spare time if you have any. Okay, so what are the most common transactions? Well, it's receipts and payments. And receipts just means income you receive. And payments are, money you pay out. So first we're going to discuss receipts. Does anybody have any questions so far before we start this? Barb?
We're doing okay.
All right. Am I going too fast or anything? Or how do the public feel out there?
If anybody has any questions or if they want to make any comments, I am watching the chat box.
Okay, I wonder if you could do a poll on to how many use accounting software out there.
So if you use accounting software, could you please type yes in the chat box? QuickBooks, yes. This was shy people. There we go. QuickBooks so far. A lot of QuickBooks. Somebody uses Wave.
All right.
Somebody's never used any before. That's perfect. Great place to start.
Good.
Yeah, lots of QuickBooks.
Okay. Wow,
Okay.
you guys are well.
There's Nancy again. Hi,
yeah,
Nancy.
this might be a little boring, and for you guys, might be remedial then for the QuickBook users.
I don't know about that, Denise. Keep on going. You can never know enough. Go ahead.
Okay, well, just always consider the impact on cash first, that bank account. When you enter, when you are receiving money or spending money, just always consider the impact on cash. And like I said, if you have those bank downloads, it's there for you. You just have to find the account to match with it. Okay, how much money did I receive? If it increased cash, it's a debit. Then decide what the source of the cash was. And really, it's really limited. Really, it's either sales, it's owner investment, it's loan proceeds, or refund of expense. Those are the major one. That's only 4 sources. Hopefully this is not too juvenile for you guys. I was trying to make it fun for myself. So anyway, cash sales are recorded the date you receive the cash for goods or services sold. Your retail clothing store sells a coat to Lori for $200 cash. Your store also collects $10. Okay, these are problems for you guys that I wanted you to think about and tell me what would be a debit and what would be a credit. Although the answer is already there, because I don't want it to make it too hard for you guys. Okay, so you collect $10 in sales tax from Lori. What account would you credit for the sale? Could they answer that in chat, Barb?
Yeah, so go ahead. If you want to venture an answer, go and put it in the chat box.
I'll wait a few seconds.
Credit. Somebody says credit.
Well, that's right. And what account would it be? What account would you code that to?
Can you give some suggestions or some hints? We have a lot of beginners on here today.
Okay, is it insurance expense?
Somebody said sales.
All right.
All right, Elizabeth.
Yay, way to go, Elizabeth. All right. Okay, now here's another one. What account would you credit for the sales tax? I know some people out there have stores and they have inventory. So what account would you credit for the sales tax? Put it in your chat box.
Somebody said sales tax payable.
Good girl. Wow, that is right on, right on.
People, all right.
Okay, now, if you're for cash sales, you use a sales receipt, which is an actual transaction. It's an actual piece of paper in QuickBooks Online to record the transaction. And then, when you're trying to match your bank download, you have QBO search for a match. And that's another thing. When you record these sales, you would have to use receive payment. When you get the money, you have to use, wait a minute, that's for invoices. Okay, for sales receipt, no, you wouldn't need to use receive payment because that's for cash sales when you already got the payment. Okay, but anyway, QBO will have QBO search for a match when it's time to code the bank download deposit. All right. I don't know how my cursor gets over there. Okay, next. All right, Lori bought your last red coat. Your retail store does not have enough cash in the bank to pay for more red coat inventory. You put 1,000 of your own personal money into your store bank account to purchase that inventory. What account do you credit? And go ahead and put your answer in the chat box. Because, the answer really is on the screen, but still. Owner investment, very good, very good. But if you've never, even conceived of debits and credits, you might not even be able to figure it out. So good job.
Denise, somebody asked, if we use point of sale, would that transaction be automatically entered to QuickBooks and to our bank account?
It depends on whether you have it set up that way. Actually, point of sale is just for QuickBooks Desktop. And no, I don't think it does. You have to, if you use QuickBooks Online and you have a third-party app, it will reconcile your QuickBooks like say Shopify and QuickBooks Online, you still have to have a third-party app for it to do that. But so anyway, it will deposit in your bank if you have it set up that way, but it's not going to record in your QuickBooks according to my QuickBooks desktop, according to my understanding. I have not ever had inventory, so I don't really know, but I've looked into it for another person, and it just does not reconcile unless you have, some sort of third-party app, if it's QuickBooks Online, or if you have a separate, like Commerce something, I forget the name of the company, but that will sync your Shopify and all that with QuickBooks Desktop. But there again, it's a third-party vendor to do that. So that money will probably show up in your bank account, but it won't show up in your QuickBooks Desktop. So, okay. So anyway, next.
Denise,
Does that answer the question?
If that person could answer that in the chat box, that'd be great. You have about 10 minutes, Denise.
Oh no. Okay, transaction entry, safety receipts. Just be sure to deposit the money in the bank, then associate the transaction with the sales receipt or loan paperwork before you code the transaction. Okay, now we're on to payments. Always consider the impact on cash, the bank account first. How much money did I spend? Then decide what the other side of the entry is. What did I gain from the money I spent? Okay, you need to pay this month's rent of $500 for your retail store. You write a $500 check to the landlord and put it in the mailbox. What account do you debit for the expense? Put it in the chat box. Anybody?
Rent.
Good. Bingo. You guys are wonderful.
Well done, Elizabeth.
Elizabeth.
We have some smarties out there. D and then J. I don't know how to pronounce the last name.
Good. Wonderful. You're an inspiration to us all. Okay, you need to pay your retail store business liability insurance premium of $400 for the year. You write a check for the amount. What account do you debit for the expense? Put it in your check box, please. Anybody yet? Elizabeth?
Insurance.
All right, that's right. Good job. Okay, now it's time to pay your retail store, or for your retail store to pay the California Department of Tax and Fee Administration, the sales tax it collected from Lori. What account do you debit? Put it in the chat box, please.
Sales tax payable.
Wow, you are awesome. You guys are awesome. Yes. And then, yeah, you debit sales tax payable to reduce that liability, and you credit the bank account $10 because you're going to take $10 out to pay that sales tax to the state of California. All right, now this is a different one. You bought a new cash register for your retail store that cost $1,200 because the old one exploded. Does that ever happen? What account do you debit? And do you need to do anything additional with assets that have a useful life greater than a year? I have to tell you guys that you don't just expense the purchase of desks, computers, printers, cash registers, all that. You do not expense that because you are supposed to depreciate that, and you have to file a special form on with your tax return to show that. And if you, oh yeah, I forgot to mention that. I forgot to mention that if you have personal, well, it's business property worth over $100,000, you have to file this return with the tax assessor and pay tax on your business property. So you need to keep track of it for that purpose alone and for your taxes. Okay, so safety instructions for transactions, always work from the source document, the original bill, the original purchase receipt. Just save all your receipts. If you have QuickBooks, you can actually take a picture with your mobile phone and embed these receipts in your QuickBooks cloud. But otherwise, save that receipt and provide as much detail and support as possible to eliminate questions you have later. Financial statements. Oh, we're going to whiz through this. Okay, now this is just the top half of that transaction spreadsheet that you can look at. And seriously, those are the major accounts in your balance sheet. It's not that hard. The balance sheet is just taken like at the end of the period, and it just shows, you know, the accumulated balance. How much money you have in the bank, what your accounts receivable are, what your inventory is, but you have to sync it or make adjusting entries for inventory. If any of you guys want additional help, just, you know, call me or email me and you get a free consultation through MCSC, or if you want to hire me outside as your accountant or whatever, or tax preparer even. I've been told recently that I can perform that for you, but you would have to pay me directly. Correct me if I'm wrong, Barb. But anyway, so this is your income statement. It's just your income and your expenses. And then at the end result is your net profit. It's very easy. That's why that one you could do on a spreadsheet, really. It's just income and expenses. Well, that is the end of the consultation. Again, I mean the webinar presentation, and I don't know if it was fun for you guys, but it was fun for me. So if you want to stay in touch or you need more help, I'm definitely interested in the WAVE thing. Since it's free, I would think that would be really helpful for beginning business owners. With a budget of a dime or whatever, you know. Anyway, even for your hobby. Yeah. Okay, so if you want a free consultation with me through MCSC about bookkeeping or tax, call me at 303-507-9560 or email me at drevelle7@gmail.com. Does anybody have any questions?
So if anybody has any questions, go ahead and put them in the chat. I just wanted to mention, if you do want a consultation with Denise through MCSC, you just contact MCSC directly, and we're happy to help you. I put that in the chat box. You could always give us a call as well. You can find us online at mcscorp.org. So can you see my screen right now, Denise?
Yes, I can.
All right, so I wanted to let you guys know what we have coming up. So on the 3rd, we have social media marketing from 12 to 1. That's being presented by Steve Burnside from Clever Ducks. And then Denise is going to be presenting on QuickBooks specifically on the 9th from 10 to 11. Then we have search engine optimization on the 3rd. That's also by Steve Burnside from Clever Ducks. And then grow your business with Google AdWords on April 7th, again by Steve. So Denise took an entrepreneurial training class, which allowed her to move forward in creating her own business here. And if you're interested in starting your own business, or you're new in business and you want to get a little more guidance. It's a great supportive environment. It's 10 sessions and that starts on February 2nd. Tomorrow, we're having an informational session from 12 to 1. If you want to know more, you don't have to go to the information session, but you can if you're interested. And then we also have Empezando, which is the Spanish version of that. And that's actually twice a week, and that's from 5:30 to 7:30. So if you speak Spanish, that may fit your schedule a little bit better. So thank you all for coming. We're glad you could join us with all of our technical difficulties. We made it. And have a great day. Bye. Having trouble ending this here.
I'm going to give you a call, okay?
Okay.